Hi, this is Nilus Mattive from Money and Markets TV. During the Easter season, I'm reminded of the old saying, don't put all your eggs in one basket. For investors, that means it's wise to spread your money around, rather than betting it all on the next big thing. So today, I'd like to talk about 3 of my favorite ways to get more diversification into your income portfolio. First of all, mix up the assets you invest in. One great way to do that is with dividend-paying stocks. They offer market-beating yields, give you the chance for substantial capital gains, and they offer reasonable downside protection. Plus, their effective yields can continually rise as companies hike their dividends. Of course, that doesn't mean you should ignore other assets in your overall income portfolio. Adding investments like bonds can give you additional income streams and help minimize the damage from temporary stock market declines. However, most bond categories look unattractive right now because the possibility of an interest rate hike keeps getting stronger and stronger. That would spell bad news for bonds, especially since treasuries have rallied so sharply over the past few years. Fortunately, there are ways to mitigate the risk of adding bonds to your portfolio. One strategy is to use bond mutual funds, so you're not just holding instruments tied to a single maturity date or issuing company. And even given the slim pickings in the bond market, I still think select categories are reasonable buys. Also, keep in mind, bonds are just one of the other asset classes that are now available to income investors. There are niche areas like preferred shares and currency-denominated CDs too. That brings me to my second method of diversifying your income portfolio, using international investments. In addition to those currency CDs, there are foreign bond funds and plenty of other ways to ensure that your portfolio isn't completely tied to growth here in the US. Of course, my favorite international investments are foreign dividend shares, many of which trade on US exchanges as American depository receipts. In fact, in my Income Superstars newsletter, I'm currently recommending 5 separate foreign dividend payers from countries as diverse as the UK, China, Japan, and Canada. Many of these foreign dividend stocks are quality blue chip companies in their own home countries, just like the biggest conglomerates here in the US. But they're typically far less dependent on the American economy. And with the US dollar coming dangerously close to a new all-time low against the world's other major currencies, I think diversifying into foreign investments is only getting more important, especially since they not only give you protection, but additional profit potential should the dollar keep sliding. And finally, I recommend a third method for further diversifying both your foreign and your domestic stock holdings. Always spread your stocks across different sectors. For an example of what can happen if you don't follow this advice, just think about the folks who loaded up on tech shares back in the late 1990s. The good news is that even if you stick solely to dividend stocks, you can find solid buys in just about every sector out there. In fact, in my latest issue of Income Superstars, I just recommended a dividend-paying tech company. And again, if you don't want to have to pick individual stocks or worry about what sector each belongs to, you can simply employ some of the many low-cost mutual funds and ETFs that are now available. The bottom line is that there are no longer any excuses for not having a diversified portfolio. So if you haven't taken a look at your allocations in a while, I encourage you to do a little spring cleaning. For Money and Markets TV, I'm Nilus Mattive. Thanks for watching.